A $72,490 truck just dropped to $58,900. It still has not sold. That same model is stacked nearly 40 units deep on a single dealer lot in Florida. In Texas, certain full-size SUVs are pushing past 115 days on the lot. Every day they sit, they cost money. Floor plan interest compounds, insurance compounds, depreciation compounds. Dealers do not call this panic. They call it inventory management. But when five-figure discounts start appearing across multiple states at the same time, that is not management. That is pressure. And with summer approaching, when showroom traffic historically slows, specific models are being positioned for aggressive clearance before they turn into liabilities. Some of these vehicles were never supposed to sit, and what is happening to them now signals something bigger. Number 15. Ford F-150 Lariat and Platinum. America's best-selling vehicle is showing selective weakness in higher trims. In multiple metro markets, these builds are exceeding 90 to 120 days on the lot. Dealers are stacking customer cash, loyalty bonuses, and subvented APR programs that can exceed $10,000 combined. Production remained elevated while monthly payments climbed. The consequence is quiet negotiation room on trims that rarely saw meaningful discounting 2 years ago. Number 14. Ram 1500 Laramie Unlimited. Stellantis pushed volume aggressively through winter, but demand did not match. Listings across Midwest and Southern states now advertise five-figure discounts on leftover inventory. Incentive bulletins show expanded factory support quarter over quarter. The consequence is shrinking gross margins as dealers rush to clear aging units before the next allocation cycle increases pressure. Number 13. Jeep Grand Cherokee Limited. Once a steady mover, it is now lingering longer in saturated SUV markets. Reports show days on the lot in select regions exceed 100. Dealers respond with bonus cash and aggressive lease structures to stimulate turnover. Supply has outpaced urgency. The consequence is faster depreciation pressure and growing flexibility as dealers clear inventory before summer resets buyer focus. Number 12. Chevrolet Silverado 1500 High Country. Premium trims priced above $65,000 are encountering payment resistance. An inventory build is visible in suburban markets. Incentives have expanded compared to early winter programs. Rebate stacking has become more common. The consequence is selective dumping of high-end trims as dealers move to prevent aging inventory from compounding losses. Number 11. GMC Sierra Denali. Luxury trucks once commanded near-sticker pricing. Now certain configurations are pushing beyond 90 days on the lot. Dealers are negotiating below the manufacturer's suggested retail price quietly to protect turnover rates. The consequence is margin compression on trims that previously drove dealership profitability. Up to this point, these are slow movers. What comes next are models where dealers misjudge demand and the correction is sharper. Number 10. Nissan Titan. With discontinuation confirmed, remaining inventory carries resale uncertainty. Sales consistently trailed segment leaders. Dealers are advertising aggressive markdowns to clear final stock before summer. The consequence is heavy discounting, as dealers try to avoid holding discontinued trucks into a softer seasonal market. Number 9. The Volkswagen Atlas pre-refresh builds. Updated versions are arriving while older units remain unsold. Dealers are applying factory-to-dealer incentives to accelerate turnover. Listings show widening price spreads between similar model years. The consequence is expanding discount gaps as stores attempt to reset inventory before the seasonal slowdown. Number 8. The Ford Explorer ST and Platinum. Production volumes remained steady while buyer urgency cooled. Multiple metropolitan markets show inventory exceeding 100 days. Dealers stack financing incentives and rebates to maintain movement. The consequence is rare flexibility on trims that were tight just 1 year ago. Number 7. The Dodge Durango RT is an aging platform with strong V8 appeal, but it has limited refresh momentum. Inventory piled up in certain states, so bonus cash programs appeared earlier than expected. The consequence is deeper discounting on performance trims, as dealers try to clear stock ahead of summer carryover risk. Number 6. Toyota Tundra Limited and Platinum. Brand strength remains intact, but specific configurations are rotating slower in competitive truck markets. Select regional incentives have surfaced. Days on the lot metrics in key regions support this trend. The consequence is unusual negotiation room on trims that are typically resistant to price cuts. Now the pressure intensifies, because slow movement becomes dangerous movement when summer approaches. Number 5. Chevrolet Tahoe. High Country. Full-size SUVs priced above $75,000 are encountering affordability ceilings. Reports show days on lot in multiple states exceed 90 days. Dealers are negotiating below MSRP quietly to maintain turnover before seasonal traffic dips. The consequence is downward pricing pressure on flagship luxury SUVs. Number 4. Hyundai Santa Cruz. Early enthusiasm cooled while production continued. Inventory growth in suburban markets is visible through listing volumes. Dealers advertise aggressive financing and rebates to stimulate activity. The consequence is price softness compared to last year's tighter conditions. Number 3. Subaru Ascent Touring. Competition in the three-row segment has intensified while consumer budgets have tightened. Inventory levels have climbed in specific regions. Incentives are appearing more frequently than is typical for Subaru stores. The consequence is broader discounting windows before summer slows family buying cycles. Number 2. The Jeep Wrangler Sahara and Rubicon select builds. Even strong brand loyalty cannot prevent aging inventory in certain configurations. Dealers are stacking incentives more often than last year. The consequence is quiet flexibility on a model traditionally known for holding firm pricing discipline. Number 1. Ram Heavy Duty. Laramie Longhorn. Large, expensive trucks financed during elevated rate environments are becoming harder to move. Multiple markets report inventory aging past 100 days. Dealers are offering substantial rebates to clear stock before seasonal slowdown amplifies carrying costs. The consequence is aggressive pricing on trucks that once delivered premium margins. Dealers finance inventory through Floorplan credit. That credit accrues interest daily. When inventory ages beyond 90 or 100 days, the carrying cost becomes visible on monthly financial statements. As summer approaches, showroom traffic becomes less predictable. If these units carry into late season, they compete directly with incoming shipments and refreshed models. That overlap forces deeper markdowns. When production overshoots demand while affordability tightens, inventory shifts from asset to liability. The vehicles on this list are not defective. They are oversupplied in specific trims, price points, and regions during a tightening cycle. Dealers will not publicly announce desperation. But when five-figure discounts appear quietly across multiple states on the same trims at the same time, that signals correction. Corrections accelerate when holding becomes more expensive than clearing. Because the real shift in the car market never begins with headlines. It begins when inventory ages and someone decides it is safer to dump than to hold.